So hello YouTube, I hope you guys are doing absolutely fantastic. So in today's video I will talk about how to counter trend and pro trend on the same setup. Now this actually is a great cherry picked example. I actually took the counter trend setup on this one, but I'm also going to talk about how to pro trend on this exactly same setup, right? We don't have to deviate from anything else, just 4 hour, and then we're just going to use M15. So basically this is just going to be the follow-up of the previous video that I just recently dropped, which was the 4 hour and M15 swing entry model. So I hope you guys had a great time with that video. I mean, I recommend it to watch over and over again. So basically the idea behind the the topic of this video basically is just, we have that 4 hour setup and we want to be able to go to medium time frame and be able to counter trend all the way down, because most of the times I usually speak about point of interest mitigations, and some people may not sometimes you don't want to wait for price to come to your point of interest and then you get a violation. So sometimes it's very important, especially for people that want to also trade holding a full-time job. You can also take counter trends, and counter trends is not risky as most people make it seem to be. As long as all the confidence is there, we can make counter trending seem high probability. So that's basically what I'm going to talk about on this one. So let's just look at it. I mean, let's just quickly hop on it, right? So let's understand here, this is the hourly, right? This is mainly the 4 hour time frame. But mainly I'm going to use the 2 hours because the point of interest are much cleaner, right? So let me just go to 2 hour time frame. So if you look at what's going on in this pair, this is EUR-AUD dollar, EUR-AUD, right? So what we had is that we can just look right is that we had this previous structure high, then this low, and then price had broken structure to the upside. So it left this demand zone right here. So this demand zone, when price came back, it was actually holding, but then price attempted to push up, but there was no bullish strength at this particular moment. That's when sellers stepped into the markets and then ended up taking that demand zone right here. So up to this point, the structure was a little, we can say bearish, right? Because the demand zone actually failed to hold. But then what happened? Bulls actually gained strength again. So it started to push to the upside. So it broke this last point of supply. So it had a break of structure. It had a mitigation. Actually, on this first break, there is nothing clean right here. Everything, basically, the price action is efficient. We don't have imbalances, nothing. So in these scenarios, I would much rather wait for the second break of structure, right? So I actually talked on the previous video. If the first break is not clean, wait for the second one. So price had broken structure, it mitigated whatever it wanted to mitigate, and then it gave the second break of structure. So now when we look here, we actually have 2 points of interest on this one. We have this one at the extreme. Some people will say, okay, Calvin, why you're not marking this one right here? This was the decisional. Absolutely correct. So let me just mark it. This right here was the decisional down candle before the up move that finally took out this previous high. But if you come down to 1 hour time frame, so let me quickly drop down to 1 hour, we can clearly see that the move, the catalyst move actually started right here. This was the move that started, this was the catalyst move right here that went on to break this previous structure high, and it left imbalances right here because it broke this internal structure high. So it left all of this imbalance right here. We can see fair value gap here, and we have this very clean last down candle before the up move. So on this particular setup, we actually have 2 points of interest. Now, as we already know, based on the previous video, when price comes to our 4 hour point of interest, we want to wait for M15 change of character. So on this setup, before we actually bring price all the way down, we want to be able to say, okay, price actually is pushing to the upside. So what do I need to see that will tell me that, okay, the hourly is ready to do a pullback towards its bullish order block sitting below? We need to drop down to medium time frame. So medium time frame is going to be 10 minutes, M15, M20, and M30. Whichever one of them, we can use one of them, right? I mean, if one of them is actually cleaner than the other, you can stick to one of them. So let's just use, for example, 10 minutes time frame, as we haven't used that much. So if we look at what's going on right here, is that we had this previous structure high, and then we had this low. and then price attempted to break above this high, but it failed. So we call this high reluctancy, right? You guys already know. So that's what happens when seller stepped into the market and violated this previous low. So we had a change of character here. Now, when it comes to counter trend, I usually don't recommend entering off the change of character, because sometimes you can see price breaking the low and then it comes all the way up, continues to move to the upside. So the great confirmation of structure shift will be after we allow the price to mitigate the change of character point of interest, and then we get the second break. That will be a confirmation that we have shifted from bullish to bearish. So in this particular scenario, we can see that, okay, we have the change of character right here. So I'll call this boss, right? And the point of interest is sitting right here. As we know, the last up candle before the down move, right? So we want to wait for price to come back to this point of interest, and then we push all the way to the downside. Now we could actually drop down to lower time frames such as M1, M3, and look for a change of character and then enter. But for the sake of this video, I just want to talk about M15 entries, just a follow-up of the previous video I just recently dropped. So let's just wait to see price coming back. So price comes back, is respecting the supply zone right there, and we want to see what's going to happen next. Okay, boom. So price just took out this previous low right here. So this was the confirmation. Once we had the second break, this was the confirmation that the order flow has shifted from bullish to bearish right here. So now, if we look up, everything has been mitigated, right? We can clearly see that there is nothing. There is no imbalance. We had this buy to sell week right here, but price came back again, mitigated. So there is nothing up to this point right here. There is nothing that was left. So we can clearly see that what broke this previous structure low, actually came from this zone right here. So we can actually see that we have this huge, this last up candle before the down move. That's where the move this started all the way down to take out this previous low. So we can use all of this, or we can say that, okay, we can use this one right here, right? But basically, if we're going to mark this one, your stop loss will have to be above this previous high. So we can say that, okay, if price comes all the way down, this zone is still valid. So we can just refine to this last up candle right here, which was actually the catalyst move that went on to take out this previous structure low. So once we have this point of interest, what we can do is say, okay, I'm going to put my stop loss above. I can see that the price action is efficient. We don't have imbalances above, so there is no reason for price to go all the way up, right? We're just supposing, right? Just looking at the price action, everything has been efficient up here, right? There is no imbalances left. Everything has been mitigated. So we can say, okay, I'm going to place my stop loss, my end limit order right there. I'll give a 10 pip stop loss on this one, just to give a little buffer for spreads, or we can use the 11 pip stop loss. I think it gives a much safer buffer right here. So 11 pip stop loss. And what is my target? I just want to bring price all the way down to this 4-hour supply demand zones right here, right? Because we actually counter trending. We don't want to, aim for the moon, right? So all the way down, we can have a beautiful 1-to-7 risk to reward ratio, just bringing price into this demand zone. And we have this one right here, right? So these two zones are actually valid zones of valid points of reaction, because price can react to this demand and push all the way up, or it can come down to the extreme. So a much safer point of take profit would have to be this demand zone right here. So we can just set the limit order right here and say, okay, let's wait to see price coming back. So okay, you get tagged into the trade. So you will only go break even once price takes out this previous structure low, right? So let me just play price right there. Okay, boom, price takes out this low, you move your stop to break even, right? Now let me also go back and show a little bit the entry that I actually took, right? So it just doesn't look cherry picked, because we actually took this trade on the private group. So this trade actually was sent beforehand for the students. Actually, some of the students also took this trade, so fair play. So let me just then I'll put again. So my order actually was somewhere here, I think right here. It was this point of interest right here. So basically what happened is that what I had seen is that price had given this high, and then this previous structure low, and then this high. So we had this demand zone. We can see price reacted that multiple times, so waited for price to break. There was nothing clean. Price then broke structure again. I said, okay, I'm entering at this point of interest. Now my entry wasn't straight off the 2 minutes, the 1 minute. I ended up going to seconds, 5 seconds time frame. This is actually something that we teach very, very simple on the community. So my entry was at 68,185. I had a 2 pip stop loss on this one. So let me just put a 2 pip stop loss right here. So this was my entry. I ended up taking partial at, my first partial was a 128, somewhere here. Yeah, somewhere here. So I entered the trade with 2 pip stop loss. And my target actually was at this previous structure low right here, at this demand zone right here. Yeah, so ended up taking it 1 to 57 on this one. So let me just go back to the M15 and place the limit order for the M15 entry, because that was the main idea of this video. So this would have been the entry just straight off the M15. No need to go to lower time frame, guys. Just right here, M10, M15, that's all you need. We actually had a 11 pip stop loss, and let me just put it right here, and we want to target these structure lows right here, right? So right here, so this would have been a beautiful 1 to 7, and my trade actually went for 1 to 100, 1 to 57 risk to reward ratio. So we can see that, price just went beautifully right to the TP right there. It was just beautiful right there, man. Let me just wait for price, because price came to the extremity right here, and boom, the TP was hit. So we can clearly see how this thing is just absolutely repetitive, guys. Very, very repetitive. So right here, you guys on the right, you have my MT5, so you guys can see that we walk all this YouTube talk, right? This was my entry. We was actually picked a 1 to 57 risk to reward ratio, so I was able to bag about 15% return on the trade, 1% risk. So price came here, 1 to 7 was hit. If you actually held all the way down to this one, would have been a beautiful 1 to 9 risk to reward ratio, right? So that was the counter trend. Now how to pro trend on this one? Once price comes to our 4 hour, we already know, right? Once price comes to our 4 hour, we want to wait for M15 change of character. So if we look at the first point of interest, which was this one, there was nothing. We didn't have a solidified low and high right here. So there was no confirmation on the first one. So we can see that, okay, we have this low, we have this high, and we have this low. Then what happened? Price actually ended up breaking this previous structure high right here. So now, where is the order block? It's sitting down here because we have fair value gap imbalances. So this is just another confluence as to why price needs to pull back all the way down here. And we just need a change of character right here, right? Because this first break of structure is clean. It left a very clean order block. It left imbalances, right? Very, very important confluences right there. And it had a strong volume on the break of that previous structure high. So this is the order block. I can set my limit order right here. Right, I'll set my limit order right here. I'll give a stop loss of 15 pips. That's okay, I believe. So 15 pip stop loss right here. And my target is to continue to push price all the way down, because we saw that on the hourly, the main intention was, the high time frame intention was bullish, right? And we wanted to continue to move to the upside. We did the counter trend, perfectly valid, right? And now we want to pro trend, just needed this M15 clean break of structure to the upside. We set a limit order, and our stop loss is our TP is going to be this previous 4 hour high right here. So simple, guys. We're not going to lower time frame, just 4 hour M15, powerful strategy right here. So let me just allow price to so we can see what happened. Let me just play price a little bit more. So let me just allow price to come. Okay, price is just built the liquidity there. So boom, right? I think this was CPI, so we can clearly see that we got tagged into the trade right here. So let me just bring this thing up right here. So right here, right, we can clearly see that the price was just engineering liquidity right here, right? All of this right here, we can clearly see relative equal lows, I mean, right here. So all of this was just liquidity, right? Then price did what? CPI came, pushed the candle all the way down and into the TP right here, guys. It was just a beautiful trade right here. So we did the counter trend and we did the pro trend on this one. So guys, I trust that you guys find this video to be helpful. If it was, make sure to hit the like button. If you're new to the channel, subscribe. Don't forget we have the monthly membership on the mentorship as well as the lifetime. So if you're willing to take these trades with me, go into more detail on all these models that we have built, feel free to hit my contact. My contact actually is on the description box below, and I'm gonna see you guys on the next one.